OpenAI, $852 billion valuation, $1.4 trillion in spending commitments, and possibly bankrupt by mid-2027. This is the map.
Dust off the records of the long-forgotten day. We trace the hidden lines where the mysteries play. From ancient wonders to the edge of what we know. Welcome to the story, Wiki Stories. We trace the hidden lines where the mysteries play. From ancient wonders to the edge of what we know. Welcome to the story. Your daily knowledge.
OpenAI's annual revenue early 2026, $25 billion. Sounds great, best-in-class growth. Here's the number right next to it from the very same forecast. Projected losses for 2026, $14 billion, over half of revenue. Gone. That's not a bad quarter. That's the official forecast for the entire year. $14 billion evaporated. And according to leaked internal documents from Fortune magazine, losses don't peak in 2026. They don't peak in 2027 either. They peak in 2028 at $40 billion in a single year. OpenAI's own projections, not some hater's spreadsheet. Cumulative losses through 2029, $115 billion. That's bigger than the entire GDP of Ukraine. Spent on inference, on training, on electricity, on Nvidia chips. On one company, burning through investor cash at a rate the startup world has never seen. The CFO, Sarah Fryer, ex-Block, ex-Salesforce, is reportedly pushing back on Sam Altman about the timing of an IPO. Because, and I quote, the numbers do not support it yet. When the company's own chief financial officer tells the founder the public markets would crucify them today, you listen. Or you fire her. Altman has not fired her. Altman publicly says break-even is coming in 2029. Privately, the internal docs say maybe 2030, which means 3 to 4 more years of bleeding cash at a historic rate. And the critical year, according to every analyst who has looked at the numbers, is 2027. That's when the real pressure lands. Why 2027? Because that's when the bill for something called Stargate actually starts landing. Let's talk about that. OpenAI has signed legally binding contracts committing it to spend $1.4 trillion, with a T trillion, over the next 8 years, on compute, on GPUs, on data centers, on electricity. No company its size has ever committed to anything like this. Let me break it down. Deal 1. Microsoft. $250 billion in Azure compute commitments through the early 2030s. In exchange, Microsoft now owns 27% equity in the restructured OpenAI PBC. That is the ownership stake of a controlling investor. And this is the smallest deal on the list. Deal 2. Oracle. $300 billion over 5 years. That's $60 billion a year. Oracle's entire annual revenue is $50 billion. OpenAI promised to pay them more than Oracle currently makes. Deal 3. Oz. Amazon Web Services. $38 billion in cloud compute. Announced in November 2025. This is the deal that officially ended Microsoft's exclusivity clause and signaled the Microsoft partnership is no longer exclusive. A huge moment. Then there's Stargate. A $500 billion infrastructure plan, 10 gigawatts of compute, built across Texas, Michigan, Wyoming, Pennsylvania, funded by OpenAI, Oracle, and SoftBank. It's the biggest private infrastructure project in American history. Added up, Microsoft 250, Oracle 300, AWS 38, Stargate 500, plus miscellaneous Nvidia chip deals. Grand total, $1.4 trillion in promised payments. This is where the panic starts. Okay, so OpenAI spends a lot. Why doesn't it just charge more? Well, that's problem number 3. ChatGPT has roughly 800 million weekly users. Massive, historic, beautiful. 5% of them pay. Just 5. 95% of ChatGPT users pay $0. Nothing. They use it, they abuse it, they generate their resumes and cover letters and homework, and OpenAI eats the inference bill. Every single query from the free tier is a net loss. Every single ChatGPT query costs OpenAI money. An average query costs somewhere between half a cent and 3 cents worth of raw compute time on a rented H100. Sounds tiny. Pocket change. Now multiply by roughly 1 billion queries a day across the platform. Suddenly that's $15 million a day, every day. The inference bill alone, just the cost of running the model after it's already trained, is estimated at $1.4 billion a year. And growing. Every new user costs more. It's the opposite of how software works. Traditional software, 90% gross margins. Add a user costs nothing. OpenAI, something like 30% gross margins depending on who's modeling. Add a user costs real GPU minutes. To hit break-even in 2030, OpenAI needs to get to $200 billion in annual revenue. From 25 today. That's an 8 times increase in 4 years. In the history of publicly traded technology companies, Nvidia is basically the only one that ever pulled that off. And Nvidia had a hardware monopoly. OpenAI does not. Meanwhile, the competition is not standing still. Anthropic. As of March 2026, Anthropic just captured 73% of new enterprise AI spending. 73. OpenAI got 27. In the enterprise market, the one where people actually pay real money every month, Anthropic is now the leader. Not the challenger, not the number 2, the leader. Their Claude model is the default pick for coding, legal analysis, customer support. And OpenAI is losing share every single quarter. Then there's DeepSeek, a Chinese lab. Their API costs roughly 1/27th of what OpenAI charges. They also open source the weights. You can run it yourself, for free. DeepSeek is technically behind by about 7 months on capability. But 7 months behind at 1/27th the price. That's the definition of a commodity trap. OpenAI's pricing power is evaporating. Google Gemini, now at 18% of consumer chat traffic, up from 4% a year ago. ChatGPT dropped from 83% to 68%, losing share, fast. So the picture is this. OpenAI is losing enterprise to Anthropic, consumer to Google, and API pricing to DeepSeek, while spending $1.4 trillion on infrastructure. This is the pincer movement. So will OpenAI actually go bankrupt by mid-2027? Depends who you ask. The economist Sebastian Mallaby at the Council on Foreign Relations wrote in The Atlantic that yes, the numbers simply do not work unless something fundamental changes. He also argues the government will never let it happen, which is a separate argument. Analysts at the New York Times financial desk independently modeled the cash flow and found OpenAI running out of liquid capital in the middle of 2027. That's the source of the original bankruptcy warning that every headline has been quoting all month. The math was not opinion. It was arithmetic. Altman's answer, just raise more money. In March 2026, OpenAI raised $122 billion at an $852 billion valuation. Amazon put in 50, Nvidia 30. SoftBank 30. That was the biggest private funding round in the history of capitalism. Full stop. And it still only covers about 2 years of the current burn rate. Raising more money does not fix a structurally unprofitable business model. It just delays the reckoning and dilutes every existing shareholder on the cap table. The real question is whether GPT-6 arrives before the cash actually runs out. If it's a generational leap, a real jump over Claude and Gemini, OpenAI can justify the prices and the trillion in commitments. If it's another modest incremental bump like GPT-5 mostly was, the whole narrative collapses in public markets and the down rounds begin. So, final answer. Is a literal bankruptcy filing possible by mid-2027? Technically, yes. Is it likely? Almost certainly no, because Microsoft owns 27% of the equity and will write any check required to avoid it. Is the business model actually sustainable long-term? That is the real open question. And nobody, not even Sam Altman, has a clean answer.